Hey, it's Nathan with options4l.com. In this video, we're going to go over how to trade stock options on Robinhood. Now, this is kind of an introductory video on how to actually go in and trade options. I'll have other videos on more advanced strategies if you're interested in that. But let's go over to Robinhood. And the first thing we need to do is go to the ticker symbol that we want to trade options for. So I'm just going to pick SPY, which is S&P 500 ETF. And you can see over here that we could go ahead and buy and sell SPY shares, but we want to trade options. So we're going to come down here to trade SPY options. And this loads up the options chain for us. And we're going to go ahead and navigate through this, and I'll show you what buttons to click and all that type of stuff. So let's start at the top. So Robinhood has a builder here, and it gives you several different strategies. It'll walk you through. So there's a single leg, vertical spreads, straddles and strangles, calendar spreads, and so on. So if you're learning about stock options, which I'm assuming you are if you're watching this video, this could be a good place to start. It kind of walks you through the process and explains things to you. I find it kind of confusing, honestly, so I don't really come over here at all. Plus, I kind of know what I'm doing at this point in time. But if you're just starting out, this could be another way to learn the different stock option strategy. So just wanted to point that out there, that Robinhood does have this available for you. So then we have the option to either buy or long a stock option, or we could also sell or short a stock option. And then we can also switch between call options. So this is the option to buy a stock at a particular strike price. Or we also have the option to trade put options. So this is the option to sell a stock at a particular strike price. I wanted to hop in here real quick and show you the spreadsheet that I have that it might be helpful for you. I'll have a link in the description down below, but it gives all the definitions on everything. So call option, put option, buy, sell, long, short, strike, expiration, etc. So all the typical definitions you'll have when trading options. And then it also breaks down the different strategies as well. And of course, I'll have videos on the different strategies, and I intend to have links to those videos over here. So I'll keep this file updated. It'll be a live working file, but just, yeah, if you're struggling with definitions, I've got this file, description down below. And I'll have other videos on the difference between buying and selling calls and puts, as there's a whole bunch of different strategies on what to do and when to do it and all that type of stuff. But that's how you go ahead and switch between the different options right here on Robinhood. Additionally, you can go ahead and select your expiration date. So let's just say we want to go about 45 days out. So we got 47 days right here, and we'll be looking at the option chain 45 days out. So then coming across the table down here at the bottom, we have the strike price. So this is the price of the stock at the expiration date. So depending on whatever trade you're making, you may want the actual price of SPY to be higher or lower than this strike price on the expiration date. Then the next column over, I have delta, but you can go ahead and change this column as well. You can click this little pencil icon, and it lets you select a whole bunch of different metrics you can go ahead and view. So whatever seems most important to you. And for me personally, I like looking at the delta. So I have the delta option or the delta metric selected here. So we're looking at delta. And then I also currently have chance of profit, but another one I like to use a lot is volume. So this will tell us how many trades are happening on these particular strike prices on this expiration date. So you can see there's been 20 or 52, 162, and so on. So SPY is one of the more heavily traded ETF, or has one of the deeper options markets. So there's a lot of volume and open interest. So that's another metric that I will reference from time to time, especially on stocks that aren't traded as frequently as like the SPY ETF. Basically, I'm just trying to make sure that there's some activity going on for that particular strike that I'm interested in. But there's a ton of different metrics, and as you get used to looking at options, you can decide what is most important to you. I'll just leave it on chance of profit for right now. Percent change, so this is the percent change in that particular option in the last 24 hours, and then the dollar change within the last 24 hours. And then we have the bid price, or if we switch over to the buy, we'll get the ask price. And if we go ahead and click on it, you can get the natural price. So the ask price if buying an option, or the bid price if selling an option, or the mark price. So this is the midpoint between the ask price and the bid price. I just leave it at the natural price, and it flips back and forth depending if I'm buying or selling. So let's go ahead and set up a trade real quick. So I want to go ahead and sell, and I'm going to sell an option. So I'm going to come down here, and I want to come down, and I'm looking for a put option at around the 20 delta. So we'll scroll on down, and I found this one. Strike price is 635. $5.92. We'll go ahead and click the little plus button right here, and it adds it to our trade ticket right there. And let's take a look at it real quick. So we can see that we're selling this particular put option for $5.92. And this is basically saying that if this option is exercised, then we have to buy 100 shares of the SPY ETF for $635 a piece, because option contracts come in lots of 100. So every option contract you buy or sell represents 100 shares of the underlying asset. And since I'm selling a put option, that would mean I'm obligated to buy 100 shares of SPY at $635 if that option is exercised. And if you're still trying to understand buying or selling puts and calls, and whether you want the stock to go up or down depending if you're buying or selling, like, just keep watching YouTube videos, keep consuming content, and it'll start to click and make sense for you. You know, it took me a few weeks to actually understand intuitively what was going to happen if I bought or sold a position, whether I was buying or selling calls and puts. So anyway, let's go down here, and it breaks it down for us in a little bit more detail. So our expected profit and loss, so we get $592. So here we go. Our max profit is $592. So I'm receiving a credit right here because I'm selling the option first. So somebody is buying the option on the other end, and I'm selling that option to them for $5.92 times 100, right? So that's where we get the $592. Now my max loss right here is pretty scary at $62,908. And again, that's because of the trade that I am doing. Because if this option is exercised, I have to buy 100 shares of SPY at $635 a share. And if SPY goes to $0, which, you know, is very, very unlikely unless we have the end of the world or something like that happening, well, then I would lose $62,908. And let me load up my calculator real quick so we can just look at the math. And I know I'm kind of getting into the weeds on the different trades, and I said that I had videos on the different strategies, but I just want to give you some details. So we have 100 shares times $635 a share, and we also earn that initial credit, so of $592. So that is why our max loss is $62,908, and that's super catastrophic if SPY goes to $0. Now in this particular case, I could go ahead and make this a defined risk strategy and do a put credit spread. So in this case, I'm going to buy a put, and I'll buy one maybe $10 underneath of my short put. So I have my short put at $635. I'll buy a long put at $625. So we'll just click the plus button. And you can see that it updated my trade ticket here. So now I am selling the $635 put and buying the $625 put. And you can see that my credit has shrank quite significantly to $1.16 times 100, right? So it's $116. But if we come down a little lower, we can see that my max loss is much, much smaller at $878. Now, we have this little profit and loss chart right here, and you can go ahead and move your cursor up and down it and see where you expect to make money and lose money. And basically, as long as SPY stays above my short position at $635 strike price, I make the full $122. But as soon as it drops under $635, I start losing money, and the most I will lose is the $878. But there's a bunch of different defensive strategies and things you can do if the trade starts going the opposite way, and I'll have more videos on those different defensive strategies. But I'm trying to keep it high level in this video, so we'll move on. So let's come up here and see what else we can edit with our ticket. So we can see that it upgraded the name. Now it says the put credit spread, so that's the strategy we are doing right now. If we wanted to remove a leg, so maybe we want to remove that, now we have our short put with our max loss of $62,908. Maybe we wanted a bigger spread right here, so we want to buy the 620. So we'll go ahead and buy that put instead, and we earn a little bit more credit, but we take on a little bit more risk in the process. And if we come up here and we click this little drop down arrow, we can set different ratios as well. So the default is 1-to-1 ratio, but we could also set a unique ratio. So maybe we wanted to sell 2 put options at 635 strike price. We could go ahead and do that. And then we're buying 1 put option at a $620 strike price. And you can see what that does to our profit and loss expectations right here. So that's how you could go ahead and change those ratios. I'm going to go ahead and set it back to 1 and 1. And I do want to point out that you can have 4 different legs in one trade. So if we switch it to calls, and let's go ahead and set up an iron condor real quick. So we're going to sell at a delta of 0.2. So we have the 702 strike price right here. We'll go ahead and sell that particular option, and then we'll come up here and we'll buy. So let's switch it to buy. and we'll buy a 705. So we have a $15 spread, just like our put credit spread. So we'll add that to our order. And so we have a short iron Condor right here, and we can see all the options that we are buying and selling right here. And then we could just go ahead and click on continue, and it gives us the option to increase the number of contracts we want to do. So if you wanted to do 10, for example, and you can see where our estimated credit goes to, about $2,400. And you can also see our max loss right there increased as well. And finally, you can set your price. So you have the bid right here. So if you set your price closer to the bid amount, it'll more likely execute sooner versus if you go for the ask amount. And Robinhood will automatically default to the midpoint, which is $2.37. But if you want to make sure that it executes, and I'd go ahead and put it closer to the bid price, so maybe $2.30, and then I'd go ahead and review my order and submit it. And so there you go. That's how you get started trading options on Robinhood. Hopefully you found this video helpful. If you did, I appreciate any sorts of likes, comments, subscribes, anything like that. And I hope you have a great rest of the day.